Price has two jobs: to sweep external liquidity and to return to internal liquidity. Once you understand both, the charts start to make a lot of sense. So most traders learn what a liquidity sweep is and they just stop there. They just start marking out certain swing highs and swing lows on their chart, and they think that's all they need to understand how a price action is going to behave. There are two types of liquidity on your chart: external liquidity and internal liquidity. Price is always shuffling between both, and if you're only looking at one, you're only understanding half of the market. So let's start off with external liquidity. External liquidity sits just outside of price structure. Just think about external liquidity sitting above swing highs and below swing lows. This is where stop orders cluster or where breakout traders place their entries. So obviously, these swing highs and swing lows are focal points for where price wants to go because a lot of orders sit at these areas. Usually you'll see price use external liquidity as a catalyst to make the move that it really wants to make, whether it's a continuation or a reversal. So you'll see price extend past a certain range, whether it's above a high or below a low, and then it makes the real move. So what are some external liquidity examples? So for external liquidity, you want to be looking for weekly highs and lows, previous days highs and lows, and previous sessions highs and lows. So an example of an external liquidity sweep on the day chart, you guys can see that we had this significant low from last week. Well, yesterday we swept last week's low, right? And you're now seeing the market move in the opposite direction. So this is an example of the market taking external liquidity, and that external liquidity was last week's low, and now you're starting to see the true move when the market is starting to move in the opposite direction. This may look a little bit better on the 4-hour chart. So again, this looks like a significant low on the 4-hour chart, very easy to see. Swept that low, and then you're seeing these big green 4-hour candles in the opposite direction. So this is why you want to be paying attention to the previous week or previous day highs and lows. But when it comes to the sessions, whether you're trading options or futures, I use this ICT kill zones and pivots indicator. This ICT kill zones and pivots indicator allows me to mark the highs and lows for the Asia session, London session, New York AM, New York lunch, and New York PM sessions. And all these times are in Eastern Standard Time. So whenever I turn on this indicator, it marks out certain swing points on the chart that would be an area of interest for maybe to sweep buy side or sell side liquidity as external liquidity. If you want to know more about external and internal liquidity, pay attention to part 2 where we talk about internal liquidity.